Hello, everyone. Welcome back to the RationalInvestor.com's. What is this? This is our Broiler Chicken Show, the weekend show. Bark, 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 bark. Hey, looks like Chris has posted the link in the lounge, so thank you very much, sir. And I see Shark Toshi posted the broiler chickens questions. By all means, if you happen to be a level 2 or level 3, or really anybody on the site, you could always just jump in there and add your question. And that way, at least we keep it relatively orderly. I think the level 1ers are still in class. So my hunch is that once they're done, we'll have them all compiling in. And maybe we'll address the questions in earnest. What I might want to do actually is I kind of felt like I gave you guys the bum rush because I was just talking so damn much about nonsense. I didn't really answer the questions in previous weeks to the fullest. So I'm not quite sure if we want to go back. I know this crazy neckline guy, he wants us to look at about 20 different setups. And I think I kind of brushed over this really quickly last week. But as well, too, I suppose we could talk a little bit of corn. Probably more importantly, just general sort of tweet messages that I put out. I really do think that the market is stuck in this massive fractal right now. I just got bleeped by somebody, probably. Let's see who bleeped. Bleeped the wrong bleep. Oh, sorry, I was bleeping your next door neighbor. Voyeur PGGN. Wow, there's a name. All right. Anyway, he sent me a nice long message. It's all good. PMA for the win. We'll get through this. And unfortunately, you guys, especially new people to trading, you're all coming to this at a very, very difficult time. If I was to do almost like relative easy time to make money in the market, relatively hard time to make money in the market on a scale of 1 being easy and 10 being hard. I'd say you're coming into like about an 8 or 9 here. This is pretty darn tricky stuff. And probably the best thing for most people, especially like, little old ladies and stuff like that, is just to cool your jets. It's really no hurry. Don't push. Okay, I got to get my head on straight here. All right, so there's the lounge. You guys are just doing your thing, being totally awesome. There is the video. Hey, 10 people. Woohoo! We're rocking. Got like a total of 15 people here we're talking to today. At some point, it's just going to be me and you, Chris. Eddie will still be here, though. -1? What does that mean? Eddie's leaving. Oh, Eddie's a bot. I don't, the funny thing is that we don't really have a big sell shill here. So as a result, we also don't really promote the website too hard on social media. So we don't have a lot of that stuff. But we will find that, hey, Bob Smith out of Hoboken, Arkansas, has done a great job managing my Bitcoin for me. You should follow him. Yeah, he's great. Hey, I heard of Bob. Bob's the best. Yeah. It's always so funny to watch them go to work. And it's so cliche the way they do it. It's like, it's so blatantly obvious. Yeah, Bob's the best, man. I don't know who falls for that crap, but I suppose it's the same as the Dogecoin with that stupid la 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 guy. Has anybody ever? And actually, be interesting to see. Someone should grab a little video clip of that clown In fact, maybe I'll even do that when I get back from Liam tonight, just to have it. You know how you can clip little YouTube videos, just to have it on the Twitter feed. So in future, I can make reference. If you hear the Prince of Nigeria is touting fucking Dogecoin, that's the top of the market. Damn it. and, and as soon as he says, oh, but this time it's different, you know it's exactly the same. Bob's not real? Yeah. Well, man, I was looking for Bob everywhere, but it turns out he's not taking any more clients. Because he got sued by the SEC. You're actually technically not allowed to do that, what they're doing, but like that makes any difference in crypto. I will say though, you can definitely see. I think this is the cycle where crypto no longer lives in this unregulated world. My hunch is by the time we get to the next cycle, and it might be one of the reasons why the altcoins just really don't do a hell of a lot now for the next 5-10 years. Really, it should be. When's the last cycle ended? Last cycle was end of 2017, beginning of 2018. So theoretically, we've got 17 and a half years of uncommodityness from that point. So that's like what, 2030? So a good book. No, it's got to be long. No, it's got to be longer than that. 2035. So 2035 is the next peak in our greed cycle. And I have a feeling that this cycle is going to be muted anyway. But anyway, we'll deal with that when we get down there. Right now it's 2022. We got to figure out how the hell we get through Benner cycle troughs without all losing our shirts here. Be interesting to see if Mr. Kwan's living the high life anymore or whether he's gone back to living in mom's basement. It'd be interesting if he actually did have to go back and move back in with mom and dad. So back to our original. So I put this this tweet out sort of through the weekend. I did see price pressing into this dotted line level on my chart, and I just noticed over the years, maybe I've been doing this too long. But candle body lows for trade location. The only problem with this darn 4-hour candle body low is look at the size of that tail. But my hunch is your next pivot's going to set up off that darn candle body low for trade location. Also, too, I thought it was interesting if I did a Foggenbaum study, a little chaos study off of this consolidation range, up, down, up, breakdown, which I think sort of started this recent cascade lower. 4.669 took us right down, basically back into the old mountain man level. And then also, too, we got a couple 877s floating out here off of this top and this top. And lo and behold, down in this area, we also have, you could say, like, it's not really, in fact, actually, you might even argue that that's, if we use that peak, we could probably use this peak, but it's interesting just drawing a trend line, boom, boom. It also seems to come in down in this area. So I kind of pointed out that I was kind of like, I could, we were heading into the weekend, and these adults, I think they are hell bent now on literally breaking the backs of these crypto enthusiasts, which is sad because what's going to happen is you're going to end up and I don't know, I think this is basically the story of the human species, but the older generation wanting to continue their control mechanism is literally going to break the hearts of the younger generation to remind them who's in control, who's driving the bus, as we say. It's going to cause the younger generation to get bitter and angry and hate the system. And it's literally going to disillusion a whole generation. And they're going to turn into tax dodgers. They're going to turn into nasty, evil capitalists that just want to fuck over the next guy coming along. And they'll just simply say, hey, our parents and the people that were in charge did it to us. So it's our job to do it to the next generation. And this cycle just continues over and over and over. So sad. Should write a book, a manual, how to not be a human. Anyway, the point that I just said was that, as we were coming into this level, to me, it just seemed like really significant levels. And I was thinking, in fact, we were sitting in the lounge last night, and I was like, they're probably going to really just mess with price here and really screw with the kids. They're going to make it look like the sky's falling. Then they're going to rally it back. Then they're going to break it down. And I have to say, you look at the price action overnight, and that's exactly what the cocksuckers did. I mean, just really, really nasty price action. And as I posted there just a few minutes ago, well, here we are. In fact, you can see the 4-hour candle body low for trade location level. Look at the evil price action. So they dumped it, then rallied it back, then took it to new lows, then an inside bar consolidation. And keep in mind, this is a 4-hour price chart. And then right on the New York Open this morning, and really it's the North American kill zone. That's probably the best way to describe this, because it seems to happen whether it be the weekend or weekday. It's just when North Americans wake up. They're all groggy-eyed, and of course they rip the market down. Oh my God, the sky's falling. Sell, 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 sell. And then instantly jackknife it right back up. So ironically enough, this image you see right here is exactly what I said here. Looks to be filling out. It's just counter trend rally. I think we could actually rally smartly here. Bunch of ugly 4-hour candles through the weekend to freak out the kids. That's what I could see. And guess what, folks? That's exactly what we got. I mean, it's stunningly cliche. I was even trying to walk the site through using the paper trading machine here on TradingView through the weekend. I think it was off of this chart. And this was just vicious. And I took 3 trades. 2 trades. This is, it's just a trader's life. This is a paper trade, so I wasn't really too stressed about it. But there's our 4-hour candle body low for trade location level. And I wanted to sort of just walk the site through how the FUs usually go. And I got to say, man, this was textbook FUery. It was perfect what they did. But I had started off the weekend with, let's do a little squiggly line theory. With what I expect them to do. So I expected them to dump the market down, then rally it back. I did not expect them to rally it right back to that 4-hour candle body low level, but I do find that fascinating. Then we're going to go down and we're going to wash the stops, right? You can see that's our sort of wow, got to wash out all the weak hands. And this stop move, it breaks, and this is interesting because this is a cute little 3-bar fractal pattern, an inverted empire, huge tail. And of course, we didn't really have any signs of divergence heading into that event. So there is that 3-bar fractal. You can see the bears were potentially falling asleep. But you can see also too, momentum, no sign of divergence whatsoever here. Really stupid. So there was justification for us to be thinking, you know what, the market's getting oversold. There's just, what the hell these damn bottoms look like. So, and this is what usually happens. If anything, this is a really, really good example of what a typical trader's life goes through. And I've done these trades a gazillion times. So that's why when I saw this play out, I was like, this is so ridiculously cliche. It's not even funny. But 3-bar fractal, boom, they bust that out. And on that move, that actually starts now the divergence process. Notice the MACD histogram. And when I saw this move happen and them go after these stops here, man, it was so cliche. Like literally you could feel, 8s and 9s on the Tom DeMark printing. So you know that we're near the end of the move. You could just feel that it was just like somebody is intentionally pushing this, and the market didn't really want to go down. As soon as they just dumped it into this level, ding, 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 went after the stops, and then instantly the selling just evaporated, gone. Thought it was interesting that shortly thereafter, and this typically happens, a big old double bottom is painted in the market right after the stop run. This is why I often say, you've heard me say before that Johnny Hoagland will say, instead of buying the 3-bar fractal, why not put your buy order where you put your stop order? And if you bought there, hey, that actually worked out really well. I suppose you could argue that there really isn't a double bottom here. So you want to wait for the double bottom to come in? Okay, fine. Anyway, this pattern worked, and you can see working away. And then all of a sudden it started to slip. And then, like, this was interesting because this is basically the European Sunday. And then as that European session was winding down and we're getting ready for the North Americans to come on, basically it was just a reset. Except let's go after the liquidity of this low here. And this one tail, look at the size of that candle. This move here busted out this double bottom right through that New York Open. I mean, just absolutely textbook. What I thought was really interesting, same sort of logic as Mr. Hoagland here, but this morning, I was just like, oh my God, this 2.618. So we got stopped out on this double bottom hunt, but that was absolutely perfect foggy. So I just went and threw the trade right back on. And fascinating, this is a 9-minute chart, but like in less than 3 minutes, remember we'd been sitting, or at least I'd been sitting in this trade all night long. And in less than 3 minutes, boom, I made the money back that I lost on this setup. And the irony of all of this is while I was going through this, I was like, I just want to scratch this out and just, offset this loss. But what a great analogy. I mean, really, technically, I should have like maybe sold half of it on a 2-to-1 and still be riding. Well, that's not what I wanted to do. Still be riding the free half of the trade wherever it is. Probably, using 3 high-low method, 1 low, 2 lows, probably still have my stop at scratch on the remaining. But anyway, I did what I did here. And it's my trading plan. The interesting thing is I'm tracking this all on this paper trading log, just having fun. So at least we were able to show all of the trades here. And hopefully I just want to fill this out and just demonstrate over time that, hey, actually we can do this on the paper trading model. But this was a really difficult trade. Classic fractal bars got completely busted out. Double bottoms got busted out. And the trade that actually did work was a big honking FU move. Very difficult to trade that kind of market. And in a weird sort of way, this is actually exactly like I had said on the tweet, where we were going to have what I thought was a really, really ugly price action all around this 4-hour candle body low level to mark some sort of pivot down here. And damn, that was uglier than ugly gets. So that's basically the weekend in Bitcoin. If anything, that's a half decent sign. Here is off the lower time frame while we were hunting this, and it was fascinating to watch this play out. There's finally the sign of some divergence. And really, that's what I want to see before I'm even thinking about actually going along with real money. Hopefully you can see markets making lower lows, markets making higher lows. Actually, it's interesting because the div actually confirmed there. This pullback here actually is breaking this structure here. So you can already start to see that this bull div is already waning a bit. And I guess, as I said earlier, what I think happened here was, weekend effery, very, very difficult market to trade. They pulled all the stops here. Ironically, no pun intended. And as it stands right now, there's our 4-hour candle body lows for trade location. I mean, damn, that was a hell of a level. And I think what's going to happen here now, unfortunately, we do have FOMC meeting on Wednesday. And the fact that that's a new low like that with that huge tail there looks very, very suspicious to me. So I wouldn't be surprised. I fully expect that they're going to try and counter trend rally this market. Not interesting. I don't know why it doesn't go beyond the 15th there. Actually, it's interesting. The very last sort of bars they have there, that's exactly the Fed announcement, like basically right there. And we have a rule at TRI: do not trust the first hour of trading following that Fed announcement. And usually nowadays, actually, it's like don't trust the full day following that Fed announcement because they just mess around with the market. And I fully expect, like, what I wouldn't be surprised is going to happen here if we keep this date in reference. You can almost see that it looks like probably going to do like, actually, here, maybe we can even do it here. Get rid of that for now. Mr. Mountain Man, you go over there. So there's the high. Oh, that's weird. Okay, there's the high there. And there's the low. And we'll go about setup. Doink. So we've done 33. Considering how ugly this bottom, be surprised if this looks uglier than crap too. Usually I like to see one low, two lows, three lows. Remember, that's that 4-hour candle body level. So my hunch is probably do something. I have no idea what this is going to look like in here, but something like this. And after the if those are the lows, I doubt they are. Let's maybe assume there's a nice little FU move on the New York Open tomorrow morning or something. You'll notice A, B, C, D. I will probably even draw it. Well, actually, why don't we go? A, B. Look at that, nice and big. C, D. Up into there. I like that as your ultimate destination into this Fed announcement event. That's over here. So, like I said, who knows if this looks polite. I mean, we might just wobbling, but I think we're going to work our way up into this window here. And then look out. That's got danger written all over it. But I thought it was just interesting the way that they screwed around with this level. And what I wouldn't be surprised, I mean, it doesn't necessarily have to go this way. I'd actually, I thought it was interesting with that 4-hour candle body low level there. We now have a really interesting level, this 9-minute candle body low here. Notice that big tail. We're always off that sort of insta 2.618 dump reversal. I have a feeling and I don't know. I mean, maybe we just crap out here. I mean, we might just damn out here, and that's the end of that sort of bullish scenario. That does seem a little bit fast, to be honest with you. I think it's going to take more time to develop. But I could very easily see them bring her right back down into this 9-minute candle body low level for the New York Open tomorrow morning. That wouldn't surprise me. So be forewarned. It's just the simple message we had, right? We started out the weekend coming into the weekend really depressed at, like Friday. I think it was like, I guess this was mid-Saturday. But everybody's like, oh my God. And I think ETH looks even worse. Bitcoin sort of melting down here. And then I was kind of like, this smells like trap. It's got trap written all over it. And then sure enough, there it was. And damn, they made this thing difficult to trade through the weekend. That was tough. Anybody who sort of shorted these market structures, boom, you got bitch slapped. Anybody who bought these structures down here, I mean, this was. And how do you trade that? Like a 3-minute candle pattern. There's your fractal. You're going to go long here. Hey, that was difficult. I did this. Yeah, does look mega phony. And it's interesting that you mentioned that because, again, I like the the idea that we rally up into this window up here. Mind you, the Fed doesn't really come out till here. I don't know. I don't think we're going to go a hell of a lot higher here. Maybe we bang into this trend line up top here. You got those. I'll just eyeball them. So you can see we're breaking this one now as we speak. Do we put in a W on the other side of this trend line? That's probably going to be sort of like LJ kind of setups, which would sort of validate that bot setup if you start seeing the W's on the other side of that trend line. With the ultimate objective up into this area. And interesting, what is that? It's not even really that high. That's only like 32,000. So I guess maybe that's not unrealistic. We could probably also draw a nice little trend line against those eyes as well. Something in there. So yeah, up into that area. I think that makes sense. So sports fans, in fact, actually you got a couple trend lines, right? So you got one objective there, another objective up into that area, and then finally an objective up into here. So somewhere in this sort of window, I think we're looking for that rally. So that's about 29,000 up to 31,500. A couple $1,000 window. Also, too, we probably should see a bit of resistance against these lows, right? Sort of Wyckoff check kind of idea, and that would bring us back against this high. And actually, I kind of like that because you can see there is a tight little double top there. Somebody's going to try and defend that. And you notice that's the ABCD objective up into here. So I kind of, this seems like a logical spot, and that's 29,300. Or in fact, actually, mark on your calendar, sports fans. Looks like there's a couple gaps here. There's one gap there, another gap there. They probably need filling into that Fed meeting. So we'll keep an eye on that going forward. So that's sort of the short-term picture. And the issue here, of course, is anybody who's been watching our broadcasts of late knows full well that we are expecting a trough. And actually, I think I even saw this. Oops. How do I do this? Is that the blog? Yeah, there we go. Really like this political roadmap right here. So there's real trough, real nasty dip that's going to, I think, really crush a lot of people's spirits. That comes into the end of June here. So I think coming out of July, there could be a really nice relief rally. But I have a funny feeling there's one more big punch in the nose coming down the pike. And, that Fed meeting, I think, is like sort of, it's mid-June. And that would basically be this little counter trend rally window that you see right there. So I think that's, like if you went, you are here now. I think that's where we are right now. So maybe just temper your enthusiasm. We don't need to go out and bet the farm on anything right now. If we're looking at things like cryptocurrencies and stuff like that, no hurry whatsoever. We are definitely in that 4-year cycle troughing window. And really the question is, how long does it take for that to play itself out? If I look at like 4-hour charts, zoom out a little bit, bigger picture kind of stuff. I do like the idea that we had a nice consolidation move, boobity boo, counter trend rally, boobity shmoo. That's just sort of working away. There is the entry of that short trade. Move stop to scratch was hit like about a week or two ago. And the irony of it all is that really nothing's happening here. Also, too, Joey Diamond and, all the Wall Street gang, of course, they put out research reports saying that they could realistically see a rally into sort of that 38,000, 39,000 area. That makes sense. Probably, our summer counter trend rally window is going to be nothing more than just an underside kiss of this prevailing trend line right now. That would be my hunch. Also, too, you can see on the profile, right, there's a significant node that is 39,000. It's basically a Joey Diamond's level there. So all this area on the profile is actually what they would call empty. There's a hole. And it probably needs filling in because ideally this profile wants to look something like that. When it looks like this, it's ready to go. When it looks like that, it's telling you probably need to do some backfilling. And interesting how this high to low trend line we've been following for quite a while. Low to high, off of that high. Interesting. It was respected through there. Anyway, that's right up in there. That would just basically, nice little bump up against there. Fill that in. So your summer rally in Bitcoin's probably some sort of dead cat bounce here. The only problem with that is, could there be a nice little counter trend rally into the Fed and then a dump into the end of June and then a counter trend rally? Considering we're talking about Joey Diamond, and we're talking about Wall Street now. Yeah, I mean, this is what they do to people. And, it's so sad about the markets. Of course, call it free market capitalism. Well, it's not really. It's a business of oligopolies. And actually, Shark Toshi, he had this great cartoon that we always pass around whenever you want to think about the way industry works with the politicians and all the industry fat cats and their big fatzos like Brian sort of sit around Congress, and they basically bark down into Congress orders of what they want to have happen. Theoretically, and it's actually interesting, me growing up in my lifetime, especially if you take like history class, they tell you that there was a great sort of leveling of society in the days of I guess it would be like turn of the 20th century. Howard Taft, the Trust Busters, Teddy Roosevelt. And, you learn about how all these evil monopolistic guys like Carnegie and stuff were all brought into line, and Standard Oil guy. I think that was actually a con job that was pulled on us. I would actually make an argument that the biggest, baddest cartel of those big fat cats, the people that actually run the money supply, they actually took over the system in 1913. So I guess it would make, and it's kind of like, Wizard of Oz. That was a story written about the corrupt banking system in the United States, and the insistence that we move to the silver standard, and of course have currency actually worth something. And interestingly enough, Wall Street and really more the banking cartel actually went out of their way to try and corrupt the message of the Wizard of Oz. So much so that they changed a lot of the references. Instead of Dorothy having silver slippers, that was the whole point of it, was the magic silver slippers would save her. They changed, like the banksters literally went in and changed the fucking story. Oh no, we're gonna change it to ruby slippers. So they totally whitewashed the protest story, and then of course made a fortune off of it. The bastardized story, producing the bastardized story through Hollywood. It's quite remarkable, really. American history. Stunning how corrupt it is. And keep in mind, Americans, if anything, at least in America, you have somewhat freedom of information. I mean, hell, you see what's happening in Russia. They just steal your money and they don't give a shit whether you like it or not. So it's a sad commentary on this stupid human species, is what it really is. But we all sort of naturally move in these oligarchy, sort of monopolistic kind of ways. And like I said, in history books, you're kind of told, "Oh yeah, we all dealt with that. That's old history. That's the past and stuff." But in reality, I think actually today's environment is actually much worse, because in that environment, at least there was some sort of freedom of press to a certain degree, especially during the Cold War. But mind you, you can find a lot of hypocrisies in that as well. So I don't know if that's totally true. Anyway, point of the matter here is the capitalists won the Cold War. The capitalists own the media mouthpieces, and they clearly, I mean, it's blatant how obvious they're finessing the message that we're getting spoon fed on a daily basis. So I guess really what you have to say is the more things change, the more they stay exactly the same. Heard a lot of people also say too that they've seen sort of geopolitics is sort of reverting back to sort of like a 19th century and before political system, whereas a lot of people in the West were kind of hoping that we were moving away from that model into sort of like a one world order kind of model, obviously based on the U.S. capitalist system. I don't know. I get the impression that it's more that multipolar world. And I guess recent actions by good old Vladdy and Winnie are showing us that actually the more things change, the more they seem to stay exactly the same. So, anyway, um, which is a little sad for crypto, because unfortunately, I think it does mean for crypto that crypto over the past 10, 20 years, sort of growing up and a big part of the community, I actually really believe that crypto would be given permission to actually be a viable alternative to the fiat currency system. Frankly, I think after 2008, 2009, the banking system had way overextended itself. They were basically bankrupt. The United States of America and all of Western civilization really should have had another Great Depression to relieve that insolvency of the banking sector. But, they pulled it off. Everybody bought the con job, hook, line, and sinker. They convinced the U.S. government and the U.S. taxpayer that, no, we can go and dilute the shit out of our currency, something like 5 to 10 times the size of the old currency base. And there won't be any repercussions, no ramifications. Unfortunately, you all now are living in the world where we are now living in the ramifications. And it's interesting when I talk to people, I think a lot of people are sort of aware now of the banking conspiracy. I even saw somebody recently was asking the Bank of England if they should have some sort of responsibility for the hyperinflation that's existing in our world right now. And they're all like, no, it's not our fault. It's your fault. Kind of nonsense. When we all know that, and if you don't know, just do yourself a favor. Sit down one day if you have some time. He's fairly long-winded, kind of like Brian. Probably has better jokes than I do, but anyway, I would sit down and listen. And the irony of it all is that nothing's changed, and it shouldn't. I mean, ironically enough, under something like quantitative easing, they're actually trying, the banking industry is actually trying to tell you, oh, you know what? The laws of physics don't matter. That's a load of horse shit. This clown, right? And Sleepy Joe, I got to tell you, man, Sleepy Joe, if what happens in November, I think is going to happen, he is going to have an absolutely shitty last couple of years. This is going to be a nightmare for him. And I tell you, man, we made the prediction a few years ago that Mr. Trump was going to lose this election, but he was going to come back and win the next election. Everything seems to be falling along those lines. And now what I think is going to happen is the American voting public, they're going to bring Trump back like a fucking Napoleon kind of guy. I mean, when Trump comes back, he's going to win like a 90% landslide because these cocksuckers have just gone and absolutely decimated the middle class. So it's so sad. Terrible. Anyway, we got a fun decade ahead of us, that's for sure. But anyway, back to my conversation here. You don't believe me? Listen to this gentleman. I mean, he's very highly respected world economist. One of the few advocates to try and somehow get control of these goddamn socialists. Because the worst part about socialists is once they get power, they get their energy from collectivization. So they'll all sit in a fucking committee room, all masturbating each other about how wonderful of a job they are, and of course how politically correct they all are, and how we're all doing this for the good of the people and all that. Of course, the banksters in the behind the scenes, they know all this. They know how this silly game works, and they of course take advantage of them tremendously. Remember the Rothschilds, right? Anybody who has any doubt, just remember the Rothschilds themselves specifically said, I do not care who's in power in a country. It makes no difference as long as I control the money supply. Absolutely. Anyway, Mr. Milton Friedman, one of the only guys kind of through the whole 1970s where it was just insane circle jerk fucking socialism. And we can spend all the money we want. We'll make a damn bit of difference. Bigger government, bigger government. And what was interesting was I think the inflation problem got so bad in the 70s that people were like, yeah, you know what? We got to do something about this. And then you had the 80s and the 90s, and they sort of checked a lot of the big government, tried to reduce the size of it a little bit. And I think in a weird sort of way that did help the inflation issue there. Unfortunately, though, we're in a different part of this cycle. And I think all of these things move in massive cycles. So we can't really think about what the 1980s are going to be like. But I did see a study the other day then, and actually, you know where I saw this study? This is so cool. I saw this study, this loudmouth fucking Canadian smartass son of a bitch did this video the other day, and he posted it, and I was like, damn, that was a pretty damn good piece. Because it's funny when I just sort of blah, blah, blah. And I like to actually, and Chris and Josh and stuff, they sort of they pick out like good sound bites, but put them all together in a pretty package and then reformat it. I gotta say, I nailed this here. It's perfect. It's absolutely perfect because it's sort of like how am I gonna do this? And I don't the question, and in the video I even said, I wonder if it's possible to get price action from like 1860. That would be really interesting. But if we go IND, or actually, I gotta get DJI. Boom. I guess it doesn't matter. DJI. And then we go TNX. I don't know how far back this goes, though. I don't think it goes. Whoops, that's not what I wanted. Oh, no. Bear with me. Okay. I thought this was interesting because our Larry Williams, who I think a lot of, I think he's a very smart individual. On our blog, we put out a report, sort of what he's thinking. This is the decennial report. Actually, it's put together by, I think, by a guy named Graham, I think, if I'm not mistaken. And even Larry goes, hey, this is like Warren Buffett's favorite guy. So obviously, pretty smart guy. You can see market goes down, market goes up, years in ending in 2. So there's some sort of pivot mid-year. What's going to cause this pivot? Larry thinks it's going to be some sort of top in the inflation numbers. Now, according to our election cycle, yes, we have that pivot mid-year. If it's anything other than a second-year new Democrat president, actually, you can see the market holds the floor and it rallies into the end of the year. But second-year new Democratic president, we go to new lows there in the fall. Shitty. So I don't know whether Larry's going to get his forecast of a nice clean bottom, right? According to that second year new Democrat president, right? We actually have to go to new lows here. So this low might actually dip lower than these lows into the fall there, but you can see into the end of the year. Look at this insane rally. And you can see all of them, right? Look at all these rally coming in. And why would that be? And the simple answer is that there's a big unknown politically. U.S. government's getting bigger by the day, and of course, it is the world hegemony. So, whatever their policies are, that's what sort of world policy is basically. That is interesting. I heard one guy the other day going, it's kind of funny when you think about who's controlling the world. If you go to Europe now, and I thought this was interesting, a couple expats are living in Portugal, and we're thinking about establishing our first TRI campus in Portugal. And I asked, so what's the language? And one of our local guys there goes, God, everybody speaks English here. It's just everybody speaks English. So I do find it interesting, and in China, right? If you want to do business, what language is everybody speaking? Oh, they're all speaking English. They're not speaking Russian. They're not speaking Szechuan. They're speaking Romanian. I beg your pardon. All right. So, point being, I thought it was interesting. I think the U.S. hegemony and sort of the Western culture is still driving the bus here. So, coming out of that big political unknown in the fall, and my hunch is, how do you say this? I have found in my experience that if a government is in total control, and the way that we've set up these Western governments is we have sort of like houses of parliament kind of idea. They're like supposed to be the elected representatives. Then you have like an executive branch who's sort of like the leader. Could be the president. Some countries they separate the prime minister and the president. Other countries have like a Congress, like the states. Then there's theoretically the judiciary, which is supposed to be like totally separate. But anyway, in my experience, if that government is all one directional, then the market doesn't like that, because basically government can go change the rules and do whatever they want. Look in Canada. This crazy socialist nut job who's in charge here. he's spending money like a drunken sailor, like George Gammon. Like if you wanted to see an actual physical person, what George Gammon, your drunk insolvent uncle, looks like, it's that uh, Justin Castro from Canada. I mean, it's shocking. And the irony of it all is Justin Castro never once watched a video or a speech by Milton Friedman, I guess, because Milton Friedman clearly demonstrates, and of course, all the socialists hate this, so they try and beat it into the ground, but he clearly demonstrates that there is a direct correlation between the consumer price index, or basically your inflation gauge, and the quantity of money in an economy relative to the actual output, i.e., I guess that would be like M2 money supply divided by GDP. So, if you want, you don't have to listen to me. Go listen to Milton, a very well respected economist. And this is sort of like the two sides of the economy. Milton here would say that inflation is 100% a monetary phenomenon. 100%. And I would have to agree with him. In the time that I've been on this planet, I have literally seen when money, both the velocity of money, if people really aren't trading houses, then house prices don't really go up. When people start buying and selling houses because they get to that point in their life where they can, and when I was a broker, we got to a point where it wasn't a question of do you own your own home, it was how many homes do you own when I would interview these people. So then of course you get into like stupid Canada. Now our real estate market has turned into a speculative, fervorous bubble where people are like buying like half houses. Now, shouldn't that be a nice little metric for the government to go, you should buy a whole house. Nobody buys a half a house to live in. That just doesn't make any sense. But keep in mind that that's basically the way that people speculate in China, right? And that's why they have all these whole cities of buildings that are garbage, and they're like half finished buildings, but people are trading these goddamn condominiums like they're some sort of asset. I mean, it's embarrassing what's happened to us. Anyway, Milty would just simply say, look, you increase the velocity and the amount of money that's circulating in the system, and of course that is going to be inflationary. Larry Kudlow was a big fan of that when he was Trump's economic advisor. More importantly, though, Milty says that, when government starts just printing money like a fucking drunken whore, or gives the green light, i.e., quantitative easing, for a quasi-government agency, Federal Reserve Board, which is nothing more than the cartel of large banksters, which we all know. And since they control the money in the United States of America, they are de facto the government. Quantitative easing, they go and explode the money supply. What a surprise. Massive hyperinflation. It's tragic, really. It didn't have to be this way. And I thought it was interesting. Like I said, I saw, and I don't know where the hell I saw it. It might have been on Twitter or something. Actually, you know what? I think it was actually in our news feed here. Yeah, I mean, this is the thing that I think I'm surprised more people aren't talking about. How about all these people that literally spent their whole fucking lives, now they're baby boomers, they're old people. They spent their whole fucking lives buying into the fucking Ronald Reagan bullshit, the George Bush bullshit, the Clinton bullshit. They paid their taxes. They were good citizens. The fucking Obama bullshit. And literally, they're on fixed incomes. They're on like Social Security. They're on pension plans. Yeah, well, we'll pay you out 5% of your net earnings on an annual basis. And in their world, $50,000 a year was a very respectable income. So you get paid a pension on 50,000. 50,000 now, you can't even fucking buy groceries. That's what inflation does. And why are not more people talking about this? The fucking retirees have got to be living on cat food right now. And nobody seems to give a shit. Fascinating. It's terrible. Absolutely terrible. So this is, ironically enough, the people that are going to suffer the most from this inflation shit are the baby boomers. They're the ones that are actually going to get killed because in their retirement, unless they are fully invested and they own houses. But the irony of it all is, let's say you own your house. You spent your whole life, you bought into the system, you paid off the mortgage, you went to work, you punched the clock, you paid the ridiculously high interest, which is just a banker's tax. So you got fucked like right, left, and center your whole life. But hey, I worked and I paid off my mortgage and I paid off, and this is my house, it's my castle. And now these cocksuckers are going and hyperinflating the economy to the point where, yeah, your house price is going up, but you need a home to live in. It's not like you can sell the house. So then what are you going to do? I need a home to live in, don't I? So, I mean, at what point do you say, okay, now I'm going to sell now? Oh, did I get the top? Oh, now I'm going to sell now. Oh, did I get the top? Oh, now I'm going to sell now. All the way along, what are governments doing? They're reassessing your property, and it's evil, these cocksuckers, especially the socialists here, like in BC. You can almost hear the tone and the voice of the advertisements every spring. Oh, it's property reassessment time. Government gets another big pay raise, and you better pay your fucking property tax or we're going to send the fucking police after you. I mean, it's shocking. So, I mean, basically the retirees are getting, not only are their pensions buying less and less and less for the money that theoretically they should have been being able to retire on a half decent income, but they're also getting screwed because this hyperinflation is jacking up their house values, and they have rising and rising and rising property tax bills that are basically now just the equivalent of they're still paying rent, like they never owned the place to begin with. It's just, you can't fucking win. You can't. You wonder why revolutions happen. And remember, folks, this is all a monetary phenomena. Just like Mr. Milty tells us, don't kid yourself. There is one group of people to blame and one group of people to blame only in this whole scenario. It's the people that control the money. Who are the people that control the money? Starts with a B, ends with a exter. It's kind of shitty, eh? Drives you nuts. Anyway, this is the part of the cycle that's the worst. I think I started off this video with, okay, so if we were going to pick a year or 2 or 5 in this 40, 50-year cycle when it really sucks horsecocks to play the market, guess where we are? We are in the worst part of the cycle. And it sucks. I'll tell you, I'm not going to sugarcoat it. It's not easy. All right. That's fun. Jeez, I always seem to get off on these rants. So, on top of the fact that this is a really, really shitty part of the cycle and the banksters are fucking us and there's really not much we can do about it, we also have what I think a pretty significant like pivot coming up here. Now, the good part about this, once we hit this pivot low, I don't think there's a hell of a lot more lower we're going for this year, believe it or not. I mean, maybe into the fall, and I could see into the election that crypto does kind of continue to get beat up. But I think generally speaking, the stock market, I think we're going to hit some sort of pivot low. It's actually going to be a pretty substantial counter trend rally, like Joey and all them. They're going to see his 38,000 Bitcoin. You heard recently, who is it? Nancy Pelosi's husband. We don't even know what his name is. Does anybody know what Nancy Pelosi's husband is? Wouldn't that be funny if you lived your whole fucking life and on his epitaph, right, on his gravestone, it says, "Here lies Nancy Pelosi's husband." Doesn't it? Nobody even knows what the fuck his real name is. That would be hilarious. Paul. Oh, thank you. Cheryl knows. His name's Paul. Mr. Nancy to you. Anyway, so if I understand correctly, Paul went and bought a whole bunch of Microsoft and Apple call options. It makes sense. I think they're probably like a week or two too early, and that's fine. I thought it was interesting. Oh, I never finished this conversation. That's the problem with Brian. I get off on these fucking tangents and I never know when to stop talking. Okay, I wanted to show you this because this is really cool. Remember I'd said I was really impressed with that video I did because you got to see this. It's pretty cool. Totally butchered the message though. Let's see. Okay, here we are. So they say that this most recent stock market rally, and I don't think, can we go back into the, yeah, unfortunately, thanks TradingView, thanks Big Brother. They won't give us yields back in the 1940s and 50s and stuff. The best that we can do is 1963 for interest rates, which sucks. Would be nice to be able to get these charts to give us some really long-term data so you can really see the crime that these damn banksters commit. Like, it'd be really interesting to see the interest rate picture through the Great Depression. But anyway, point of the matter here of this is, let's put this. Yeah. Okay. 1982. So there's 1970s. This is the interest rates. So bond prices, of course, are inverse of this. So you can see interest rates going up. We'll make the stock market. Why don't we make this line blue? All right. So stock market's blue. Interest rates are orange. And then we'll do today. So hopefully what you see here is over the past couple of years, maybe we'll do this over. There we go. So last couple of years, interest rates have been going up dramatically. And Mr. Williams was saying that I don't think you're going to see interest rates stop going, or I don't think you're going to see the stock market start going up until you see the interest rates actually top out and start to roll over, i.e., we've gotten control of this inflation problem. And I thought it was interesting if we go back to 1980, same sort of thing. They say officially that bull market of the baby boomers started, that generation started when the interest rate market topped out. And this is, I was so impressed with that video I did the other day. You can clearly see the top in the interest rate market, and they say theoretically, I think it was like March, and I think it was basically that M top when where's March? I guess maybe March somewhere in there. Maybe it's the 30-year bonds a little bit more clear, but you can see clearly massive M tops, a top in interest rate, bottom in bond prices. That was August of 82, and notice that was basically the bottom in the stock market. And as soon as that M, right, we always say, what are you supposed to think if you ever see the market smiling at you? In this case, it's one of these double smiles. Double smiles are even more powerful, where you get like a smile inside a bigger smile. So huge signal there, massive structural signal, huge, right? This is a weekly price chart, massive signal. What does the stock market do? Takes off like a rocket. So that's exactly the message Mr. Williams was trying to convey to you guys. As soon as the stock market believes that the Feds have gotten in front of this inflation problem, that's when we should see the bottom. Now, here's our current situation. You tell me. Number one, does it look like the Feds have gotten in front of this inflation problem? Orange line. Do you see M's there yet? Hey, this is just keep this as simple as possible, please. People also ask what percentage of the Chinese population speak English. According to some estimates, fewer than 10 million Chinese or less than 1% of the population speak English in Hong Kong. Special administration. Official language website is right. Fair enough. All right. So I get the impression that we're kind of like maybe like right here. So you notice the stock market, you see that was in like October 81. That thing didn't bottom until like August 82. That's like about 7 or 8 months later before it really took off. So could we see that kind of scenario? Remember, so what is that? That's like we said, September, October, and we didn't really roll over until like almost a year later. Could we have a situation where maybe like heading into this June, July? Remember, we said the Chair Powell himself even said the May, June comparisons are supposed to be the worst. So maybe we top out something like that, kind of like that action there. And then, like quite literally, we could probably even, mind you, this probably won't work, but we could even go like that. There. Oh, no, it's going to grab the stock market. Darn. I was kind of hoping I could just grab that interest rate. Oh, well, that didn't work. Anyway, point of the matter here is, we could sort of think that maybe there's going to be a bit of a short-term reprieve. And you notice market moves up for a few months here. Then we roll over and have to go to new lows. And then we're sort of, oh, God, can we somehow struggle through? This is like 23. So can you see how if we go back to our, what's the typical Democrat president election, we have that sort of, kind of like you go, you are here now, right there. We're going to have that counter trend rally through July, August, and it's not going to be that impressive, but it's going to be on some sort of top in the bond market here that comes in, or top in interest rates, bottom in the bond prices. And we sort of go into this kind of environment. Go into this kind of environment. Then market rallies back, thinking everything's fine. And then we start to roll over because maybe interest rates haven't topped out. Maybe, we had, ironically enough, this will probably just be the 38.2. So this would be like 38.2 of this range. Yeah, that's pretty close. So this is what we should have, kind of like what, we saw this in Bitcoin. It's the same damn thing, fucking, crude oil. At any given point in time, you should look for that 38.2 retracement. And then the question now is, okay, is this for real? And I think the market here is kind of going, maybe we're heading back up, pushing back up. You can see stock market rolls over. So I think, you could kind of see the similarity here. Maybe we're sort of like right in this window here kind of thing. Going to get some sort of counter trend rally in the stock market through that July. I think it's because of these bonds at some point here. Like we said, Powell said that May, June are the worst. So we get through this silly May, June period, maybe July. I can see July 4th. There's going to be a big push for carpooling. People are going to be like, leave your car at home and take the bus. It's the right thing to do. All that kind of talk. I don't know. It's probably going to have something to do maybe with things calming down there in the Middle East or Eastern Europe. But I could see the bond prices come back to 38.2. This thing works its way back up. That's kind of like this window and that window. And then, unfortunately, like you see here, heading into the end of the year, that was sort of like our prognostication. of what's going to happen into November, December, I have a funny feeling they're not going to get control of this inflation. There's going to be another 6 to 8 months, probably through even into early 2023, where we have another big wave of inflation shit. And as I said, Sleepy Joe, I have a funny feeling Sleepy Joe's in some political hot water here. And come November, you could see an absolute tsunami going the other direction against him. And that's just going to basically make him a lame duck president. The good part about that is it should bring a halt to the runaway socialism. And I wouldn't be surprised if, ironically enough, it's going to be the market that actually it's going to freak out consumers, and they're probably going to vote for the right wing and get the socialists the hell out of office. Ironically enough, also too, this is going to really focus the attention on the politicians. And ironically enough, like I've said this repeatedly, I'll say it again. The crime was initiated in 2008, 2009, 2010, 2011. Ironically enough, right now, we're just looking at the after effects. So the inflation crap's already happened. All of the reason why you see prices going absolutely apeshit right now is because of what was done in 2008, 2009, 2010, 2011, 2012. This is just the after effects. And you know that that's the case when the European banksters themselves, keep in mind, do they think altruistically? Do they think, you know what, we're going to be really nice and we're going to give away free money, and we want everybody to be happy-go-lucky? I mean, seriously, these are banksters. You know the answer to that. Come on. So you hear people like the ECB endorsing the idea of the minimum wage being raised. What? There's no way in hell a bankster would ever endorse a rise of the minimum wage unless this is the very end of a massive con job and they need to somehow throw the public some sort of bone, right? Throw the plebes, like the Roman plebes, throw them some sort of bone so that they don't absolutely go apeshit and revolt and come after you and put your head on a pike kind of thing. So to me, this, like when they're talking in Europe about, Seward did a presentation last week in the Daily Brief, when they're talking about, instituting a minimum wage across Europe, well, that's clearly they've gotten away with the crime, and now they're just trying to mop up the after effect and now start, placating the peasants. So anyway, there's not much you can do about this inflation shit now. It's done. The day when we were supposed to do something was 2008, when all those cocksuckers, and I can still remember the look on Joey Diamond's face when he had to sit there in front of Congress and all of those banksters, all the fucking Goldman Sachs crooks, and they're all like, "Oh, don't blame us. We're just, George Bush Jr. said every American should own their home. We just did what we were told." Fuck off. It was all a goddamn con. So they did it. They got away with it. Woo-hoo! Humanity sucks. I don't know what to do about it. Hopefully, we don't fall into the same trap again. But I have a funny feeling that the way that these Western societies are, by definition, this has to happen once every 80 years. It's like it has no choice. Why? Well, whoever said that governments could just endlessly spend money that they don't have? That's impossible. You can't do that. What happens if you go out and get a credit card and you hit the limit of the credit card borrowing? Do they just give you another credit card? Well, they could. Could you go out and just get another credit card? And I've heard of some people literally go get credit cards to pay the monthly payments of other credit cards. Can you just keep doing that indefinitely and it'll just never come back to haunt you? No. But that's basically what our society does. Is for some reason we've just, and this goes back, I think you could make the argument it goes all the way back to Jesus Christ, right? And him getting angry at the banksters in the temple for skimming off the top for the people who had to buy their their silver coins for their religious tax. I mean, I don't necessarily agree with the religious tax, but the banksters themselves, the money changers, as they used to call them, they're the same people, exact same people. No difference. And if anything, it's a great tell of society that the only people that I know of that Jesus was ever upset with were the banksters. So how ironic. They're just as popular today, it seems. Anyway, that's here and there. Okay, so that's sort of your roadmap, party. And of course, like I said, I was so impressed with that video. I was like, holy shit, that's perfect. So you can see this stock market will turn back up as soon as we get control of the interest rate problem. My hunch is, and then this also, again, gotta say, I love the content of TRI. TRI's got absolutely perfect content now. So we've been talking to you guys about Mr. Benner. And actually, it's so cool now if you go on Google and you Google search Benner Cycle, Josh's name and address comes up. Because anyway, he sort of redid this so you can see this very clearly. But this is 19, right? Was our peak. And what was fascinating about this was January 2020. You guys all remember, and I remember it distinctly, January 2020. Oh God, it was incredible seeing all the cronies selling stock, like Bezos and stuff selling his Amazon and all that. God, I remember that like it was yesterday. That was this event right here. The interesting thing is you go, well, Brian, it looks like the stock market moved higher, so I don't know what you're talking about. You must be trading a different stock market than us. But the irony of it all is if you take into account the money printing, right, everything equal, actually look at that 2019-20 peak there. Isn't that incredible? So that's how dramatic the drop was. And they were all insiders. It was remarkable. We were commenting at length, cool Kelly Loeffler, all that nonsense. This was before the COVID scare. How the stock market guys were just making an absolute fortune here, and the amount of stock that was moved through the January leaps expiry here was staggering. It was just like trillions of dollars. So market collapsed, and then of course big government bailouts, right? Shouldn't we debate mortgaging our future? Shut the fuck up, right? So you think that the stock market looks like that right now? Woo, all-time highs. Woo! But reality, no, that's not the case. But anyway, that's here and there. So I do find it interesting that was that 2019, right at the very end, they used the leaps options expiry to exit the market. They didn't even have to pay commissions. Because if you understand how options work, they're very, very quiet. No exchange transaction, everything settled off book, totally quiet. Never have to report anything. Anyway, point of the matter is that our Benner cycle basically said that was supposed to be a risk taker's peak. And of course, you all remember fucking crazy Bitcoin and dog money and all that nonsense. I'll tell you, this guy's really good at it. Mind you, he's probably going to be over the hill by then. But if you ever want a warning of when a market top is about to come in, just follow this dude. Anytime he comes out with a music video with regard to this topic, did I lose the internet? Am I still connected? Look at that. Am I still here? Can you guys hear me? And you're still connected to us. All right. So somebody clearly does not want me to show you something on YouTube. That's kind of interesting. Oh well. Maybe I have it over here. There he is. I mean, he literally nailed the top on this dog money. So anytime this guy comes out with a music video, run for the hills. Literally, that's your cue. Head the exact opposite direction now. He literally nailed the top in Bitcoin in 1718, and he nailed the top in dog money there in the spring of 21, I guess it was. Anyway, blah blah blah. So smart money was bailing here, and unfortunately, kind of like that image I was just showing you there a moment ago, I like the idea. I mean, I don't like it. It's going to be painful as fur, but I like the idea that, basically we're here. 22 probably ends somewhere like here. Then there's that counter trend rally into the end of the year. Then the beginning of 23 and into sort of, let's say first, second quarter of 23 is actually when we hit our trough low. Now, does that correspond with the whole Bitcoin narrative? Does Bitcoin usually like to, and it'd be interesting actually to do like an interest rate comparison. But if we went BTC USD, oops, I want to do that one. I'm going to do it on this one. All right, so there's your 1982 scenario. Interest rates topping, stock market took off. There's the current scenario. Are interest rates going to top? When they do, market should take off. And Bitcoin. This isn't such a bad scenario. I mean, I don't know if it works in years gone by. Well, I guess it does, eh? Look at that. So hopefully everybody can see bottom in Bitcoin, December 2018. Can you see the top in interest rates? That's pretty cool. Damn. I didn't realize it was so well correlated. Does that make sense? You with me? How about the previous one? Last cycle, and I remember this one specifically. There's our bottom in Bitcoin price. It's interesting how interest rates actually topped out here. So not exactly the same image. Yeah, I wouldn't say they correlate too well there. So you have a bottom in interest rates, but Bitcoin price took off there. I do like this though. Gee whiz, that sure is sexy. Actually, that might be a commentary of us transitioning. Remember, this was supposed to be the fear cycle over here. So very different. And then the transition, for all you level oneers, transition was supposed to be third quarter of 2017, fourth quarter of 2017, first quarter of 2018. So I think that the whole market made the transition here. And believe it or not, while you guys like it or not, we're actually into the next greed cycle. And we're now, almost like 5 years into this 15-year cycle. So there's only 10 more years left of this greed cycle. Fascinating. Anyway. So I guess what I would say here, and I do like this thinking, kind of like what I showed you with the Dow, we eventually end up topping. If we can put in some sort of short-term top, then that actually might set a bit of a counter trend rally base for Bitcoin. Then there's going to be the move back up, kind of like what we saw, remember, in early 80 here. Yeah, excuse me, over here. Counter trend rally back up top. And on this move back up top, notice all the risk melts back down. So on the move back up top, Bitcoin rolls over, and maybe that's how we have our final flush out to 10,000 or whatever it is, cost of production there. Then this thing tops out. We get our M within an M. All right, two big M's, this big M and then the little m. And Bitcoin bottoms, and woohoo, off to the races we go. So there you go. There's your future. Just take a screenshot of that, and I'll see you guys in 6 months. Actually, no. Where are we? It's June. So what I'm saying is this should all play out about middle of next year. So, and actually, this should be absolutely perfect timing for us to go and buy that property in Portugal, because the beginning, like the first, say, 4 or 5 months of 2023 through this window, this should be SH. This should just be horrible. So mark my words. But once we come out the other side, then we're good to go. So if anything, I'd almost want to just push all this up, maybe like maybe even something like that. That's what we got ahead of us. So get ready, folks. In fact, I should probably go and then down. So that's what I actually think is going to happen. But actually, this also has to be pushed out too. Anyway, you guys get the idea. Okay, so rant. Hopefully all you guys sort of get an idea of what I'm thinking here going forward. I don't know whether it's any of value or not. Specifically today, we're supposed to be answering questions that students have out of the level 1 program. Try and help you understand the program material a little bit better, just in case the TAs or the instructor maybe felt that they needed my assistance on the answer a little bit. As well, too, I did notice today Sharktoshi was offering to give tutorials to anybody who's looking for further assistance. Keep in mind, there is no sales pitch. There is no shill. If you work, you should be able to learn all of the material from the school program on your own, with the assistance of the Q&A sessions that Grim has, the office hours, and Sharktoshi and Peter. And then also, too, like I said, you can ask me questions through these weekly videos. And you can also ask Monday to Friday through the daily briefs. You don't need anything more to learn this program. But I did see, and usually every term we have this, some people are like, well, I wouldn't mind a little bit more extra one-on-one. And it's just out of the goodness of his heart. There is no hard sell. There is no shill. Sharktoshi said he'll make himself available for sort of personal sessions. Reach out to Josh and, come to terms with him. There's no shill here, though. There's no sales pitch. You don't have to do it. He's just offering out of the goodness of his heart. And frankly speaking, thank you, Josh. I appreciate that. You don't have to do it. I would love to see more people on the site do TA services. It's just that, frankly speaking, it's not easy. First off, you got to know what the hell you're talking about. I mean, Sharktoshi's been around the site long enough. I think he knows. If anybody's going to know what the trader's life is, he definitely knows now. No doubt about it. And I think that our staffers, right? Graham, Sharky, Peter, Kiran, Marat, Josh, Ray, all of the instructors and TAs in our programs are very, very intelligent, and I think any one of them, if they want to offer the TA services, great. I think you'll be well served, but there is no shill whatsoever. It's just something that they're doing just to help you. I just wanted to say that because I just saw this morning people were asking questions, and I've had in the past, it's weird. I've actually had some people go, "Oh, you're just trying to hard sell us more products." And we're like, "No, we're not." So I've officially said there is no more shill. You just want to take the course and do the course on its own for what you paid, perfectly fine. Okay, gonna leave that at that. Also, too, I maybe brushed over this gentleman's questions a little bit too quickly last week, so I just wanted to go back and make sure. I don't know whether Mr. Crazy is here, but if you are, let me know. If I do remember that I even said that, at the end of it, just if I didn't ask the question or answer the question, maybe we can take another stab at it. So this should just be a quick review. I do remember talking about these, and then we'll get into this week's, and that should take us to about 1 o'clock, and then I'll head off to Liam. So trying to understand the bot better, and my suggestion was just take tons and tons of setups. If you do 100 of any of these paper trades, you're going to know these setups backwards by the end of it, I guarantee you. And then I sort of walked through. I remember last week I did just a really simple one. I mean, they're everywhere. I think I even was talking to you guys about one here. There's a bearish one that's working on Bitcoin right now. Mentioning to try to hunt for significant highs, lows. Can you elaborate when a high or low is to be considered significant? And it was interesting. I was listening to Kiran, and you can even you want to change your chart to a line chart, make it a hell of a lot easier to see swing highs and swing lows if you just change that to a line chart. Way that sure looks like some sort of key low. That looks like some sort of key high. That looks like a key low. That looks like a key high. That looks like a key low. A lot of times what I like to do is actually draw like a straight line. So connect the dots, highest point to lowest point. And of course I do my ABCDs. I'm just going to clone this. If there's any kind of counter trend rally, I'm just going to put the peak right off of that level. And there's your ABCD. Right? You can see I already have it working here. So probably miles under your tires. The more and more you do this, the more and more you're going to see this. Keep in mind, I've probably done 100,000 charts in my days. So if you get to half that number, then you'll probably be able to see this stuff pretty easily. So get to work. You'll get it. That's good. You could use the Williams fractal tool. If you're in level 1, when we get to the candlesticks, we can actually, Grim, you're here, right? I need to, Grim, if you have a window, I guess really tomorrow or Tuesday or Wednesday, maybe even Thursday. I really would like a meeting with you to sort of figure out what our best strategy is to deal with the candlesticks module and the revamping I'm going to have to do of it. And I got to re-record that through the week here because they were coming up to that module pretty quick. And that's my big assignment for this week. So I guess he's stepped away. But Grim, if you can hear me or if you watch this later on, I'll PM you on the site. Get together with you. But anyway, when we go through the candlesticks module, we'll introduce you to the Williams percentage R, or because it's Williams fractal tool, I guess, on TradingView. So that's one way to help you. Absolutely. For now, I rather look for wave-like motions. That's good. Yeah, there's nothing wrong with that. You know what it is? It's just miles under your tire. I want you to do 500 studies. I guarantee you. After you do 500 charts, trying to map out where's the pivot high to the pivot low, you'll get it. It just takes just a lot of miles under your tires. Just that simple. Okay, when measuring the last move prior the bounce, how far back shall this be measured? In this example, Yeah, you could do both. What I would say do is you got like a 1 hour chart here. I think probably the first thing you should do is always start at the highest time frame chart. So that's my first piece of advice to you, Mr. Crazy, is zoom out. I mean, I don't know what the hell this is. What does that say? ADAL? Oh, I can't even see that. I'm blind. Weird. Look at that. When I when I zoom in, the image gets smaller. I'd love to be able to zoom in and see what the symbol is. I can't. It's weird how Training View does that, eh? I don't know. If you could tell me what that symbol is, I could pull up the chart and show you. But I think you're looking at too low a time frame. You should be looking at a bit higher time frame. You could do one here, there to there. So I'm not quite sure why you didn't do that, but there to there, and then project that off of there. That looks like what that is. You could do here to here off of maybe like a daily chart. That could easily be a swing high, swing low. So first thing I would say is get off the 1 hour chart and zoom out a bit. Right? And just when you zoom out again, yeah, why are you down on these lower time frame charts? This is ridiculous. This is all back and forth, back and forth. You're going to drive yourself crazy looking at this stuff. Get off these lower time frames and get up to higher time frames. Keep it simple. All right, like hell, just even I would even say start at something like a line chart. Right? Start at a weekly chart. And if anything, go back in time, kind of like what you see here, and just go, what's the easiest way? Right? Probably even do things like, clearly, this is there to there. That definitely looks like a swing low to a swing high. And project that off of there. Gives you an upside target there. This, they have like alt ABCDs. This would just be a regular ABCD, but they probably, 127s, 1.618 is probably up into here. And I remember when that was playing itself out, we were all watching with bated breath. How would Bitcoin act through here? But there's a really simple example. And you can drill in. I don't know. A to B. C to D. It's legit. Does it mean that the market actually traded down to it? Well, in this case, yeah. It's pretty solid. Boom, 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 boom. Could also do another one like right in here. Boom, boom. And then another one. Boom, boom. But look how clean and simple this chart is. When you look at this, oh my God, how much data do you have on here? Way, way too much data. And if you're studying these price ranges, why on earth do you have all these indicators on here? Put this stuff away. You're confusing the message. Why do you have this stuff on the screen? If you're studying price, then just study price. You can always have the template and you can minimize and maximize the indicators. But if you're studying price, really study the price. Somebody says it's ADA USDT. All right. There's a million of these things, eh? Shall we do Binance? So here, maybe go through the process of just drawing all these out. Like I see, like you could do one there to there, and then clone that there to there, right into that level. Swing high, swing low, up, down, up, down. I like the idea, of course, just sort of getting into the habit of drawing these. Here's probably you said, well, I'm doing the bullish bot kind of thing. Well, we know that according to the bullish bot's rules, we want at least 33, but no more than 66. So correction. So as a result, most of these kind of studies that we're doing, they're just not going to work. That's not 33%, so there is no bot there. I don't think any of these are. Right? So, okay, you're like, okay, well, Brian, I want to find bots. Okay, well, then let's go maybe like a daily chart. And, probably not a good idea to force things, right? I might go, well, there is a swing high up there. Down to this low, and you can see we consolidated nicely off of that. So there's a move, A to B. And clone that, and we'll just do it right off of the high there. Right off of that high. So A, B, C, D. We can take our little bot measuring tool. So did we get a 33% correction? Yes. Do we go beyond 66? No. All right, so that's validated. And we'll clone that. We'll adjust the numbers for the bot setup, trade setup. So we're going to try and enter at 25% of the range here. And I mean, one high, two highs, three highs, four highs. Pretty solid breakdown through there. And we're going to look for this level down here as our target. We'll move our stop to scratch on this event here. We'll start locking in profits as of this level here. And we have our AOCO order exit order right here. So that's a pretty simple exercise. Try and do another one and go, well, so that one worked. It went all the way down there. Maybe there's another one here. It goes like there to there. Nice little consolidation at this bot objective. So there's your measured move, A to B. Then this counter trend rally is very messy, eh? So it did work its way as high as there. And then it started to break apart. Do we have three lower highs here to work with? Not really. I don't think I'd really want to face that. Man, I mean, look how well defined this is. What social cue? I don't know, it doesn't really make sense. What do I always say when it comes to hunting short setups? When the market is this, you want to be thinking, uh-oh, you better be careful. Can you see? Let's see, does anybody know what the answer is? Yeah, look at there's about 40, 50 people over there on YouTube. That was really helpful, BB. All right, TS, is that you? Are you crazy? Mr. Crazy Neckline, is that you? What are we supposed to be thinking if we're thinking about shorting? How about you people in the lounge? And there's not really many people here today. Cheryl. Yeah, it's nice to see Cheryl here. Hello, Cheryl. BP. BP looks like he's MacArthur and he's about to invade the Philippines. What's the question? Question is, if we see this, what are we supposed to start crapping our pants over if we ever see this in price action? There's your M2 money supply. I mean, look at this. This is ridiculous. Thank you for posting this. This is nuts. All sectors, debt, securities, and loans, liabilities level, gross domestic product. It's just going through the roof. Oh, that's always a good sign. What I usually say is if you see the market smiling at you, it's getting ready to take your money. So does this look like a smile? Or it's actually making this actually has a very specific name to it. And it's not a smile. Right? This is a smile. Can you see how this was a smile? Lots of smiles. Look at all the smiles. Smile. And then this one. Remember I said earlier, if we can get smiles within smiles, oh my goodness, that's so awesome. So that looks like a pretty good setup, right? It's nice consolidation. Away you go. There's nothing here. There are no smiles. Just keeps making higher highs and lower lows. What usually ends up happening, and this is what drives you absolutely crazy, is that somebody will say, well, I think that this market is a short. So I'm going to somehow force some sort of bot setup here when there is no setup. And, they'll go, okay, well, I can't see it on a daily chart. So maybe if I drill down to like an hourly chart, it'll show up there. So then that means I'm going to be now off of the hourly, and this is what I was kind of scolding earlier, is that I don't like operating off these lower time frames. But I could see you go, okay, well, there's the swing high, there's the swing low, and then there's the high. Okay, so I'm going to go 1, 2, 3. Okay, so there's my 3 lower highs, and I'm going short here. And it's like, come on. Try and remember grade 3 English teacher. Or, I don't know. Do they have the letter M in Romanian, Eddie? Or the letter W? Yes? All right, so think of your grade 3 Romanian teacher. What kind of grade do we get for that? Probably a pretty good grade. What kind of grade are you going to get if you go and do that? I mean, seriously, folks, I don't like to poo-poo this, but if you're going to be like, trading the butt and you're like, okay, there's my 3 lower highs, that's this kind of talk. Well, what a surprise. And you're going to come back to me and go, Brian, your bot setup sucks horse cocks. Because this really is not setting up well. We want grade 3 English teacher kind of shit, or grade 3 Romanian teacher, not Dunsat. So, this is something you're going to, and that's why I think it's probably better. I guess that wasn't that person. But I think it behooves you to slow it down. Look at a higher time frame charts and just let the trade develop and let it, you should look at your image and go, gee whiz, if I didn't take that M there, if I didn't short that, that'd be a doofus. Here, there is no M. There's no M at all. That's straight up, straight down. Hopefully that helps a little bit. And you can see they did it again here. Look at this. So, you might come along. Boom, 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 boom. Okay, and you go, all right, I want to bearish bot this thing off of that high there. It gives you an objective down here. And it looks like that's where the market's going, but did this set up very well here? Grade 3 Romanian teacher. What's she going to say? Hey, teach, there's my M. Do I get a passing grade this term? Get back to grade 2. You can't even write Romanian, let alone speak it, you ignorant bum. Okay, so the point being that really important that the setup is very well defined, not sloppy doppy. If it's sloppy doppy, then there just isn't a trade. It's as simple as that. All right. So, Mr. Crazy Neckline, I'm trying to help you here today. I hope you're getting this. Is it 0, 1, 2, or 3? Is there some rule of thumb to identify to define the starting point? That's this stuff, eh? 0. I don't see 0. I mean, frankly speaking, I don't see anything here to work with. I mean, I really don't. What I see is extreme volatility. Like that, you can see from this low, I don't even know where you're measuring. But like from this low up to this high, that correction, that's way beyond 66. There is no bot there. This, if anything, is like El Tangonator. You got one here, A to B, C to D, but that's got to be way more than 66. So I don't think there's any bot there. Maybe, you know what? Interestingly enough, pull up this one. What does that say? EGLD. I think you might be able to do a bot from here to here because that looks like that's a 50% retracement. But notice, if you clone this study now and project it over here, it's already hit the 50% of this anticipated move. So if anything, this pullback here to that 25 entry means that the whole setup's been negated. So this doesn't look body at all, not even remotely body. So that's a little concerning. Remember, the bot is nothing more than we had one move, then a consolidation, and what we're looking for is a replication of this initial move on the other side of the consolidation. That's all the bot is. Big move, consolidate, second part of the move. So this is back and forth. That's not, like I said, there could potentially be, all right, there's an initial move, consolidation, but what you would like to have seen here is it rally up, then go nice and quiet, and then break. The fact that it's so big here means there is no bot setup. Remember, no more. Okay, I've talked that into the ground. Okay, this seems important to me, especially regarding lower time frames. I would like to avoid just scrolling further back as I'm on a smaller time frame. I don't like you being on smaller time frames. I would rather you get the fuck off of there. Is there any rule that can be applied? And if you're going to be trading on a smaller time frame, like when I was sitting there with the crew over the weekend, this is what my chart looks like. It doesn't look like this, and I'm sitting here trying to pick apart trade setups with the chart looking like this. That's wrong. I mean, if you're going to be down on these lower time frames, then there's nothing wrong with that. But I want to see what the hell's going on. I want to be able to visually actually see these candles and see what they look like and map out. Well, there's a 3-bar reversal. So we took the long and, of course, boom, got stopped out. Merry Christmas. There's a double bottom. So we bought the double bottom and boom, stopped out. Merry Christmas. Maybe you learn from this, right? This market state, probably best to wait for confirmed divergence before you start going and hunting for bottoms. Could very easily be some sort of rule like that. Notice this right here, right? We just did a really simple chaos theory, 2.618, threw in a stink bid, and boom, instant fill. Anyway, point here, and then, furthermore, I'm interested in hunting a setup now. All right, what does this setup look like? Nice, and I can see all the levels. I can see the candles. You can see I have drawn out from the bottom up to the top, 33%. We can clearly see this low has been taken out. So we have to keep moving this second A, B, C, D part of the study. You're just going to have to keep moving it down. And if we go beyond 66 here, which isn't too far away, if we go beyond 66, then it means bot's off the table. So hopefully that gives you some food for thought. But let me ask you a question. I'm thinking bullishly here. Is there anything on the screen that you can see clearly that might make me go, yeah, maybe I ought to cool my jets for a little bit? Thank you, Cheryl. There's a big fat M staring us right in the face. Isn't that supposed to be bearish? It's interesting how we have this existing trend line going way back. I'm not even quite sure what that's drawn off of. Look how, oh yeah, that's drawn off the original M top up there. So look how the market just M topped off of that original trend line. Ouch, doink, doink, see you later. That hurts. Look at that. And we're cascading to new lows as we speak. So if I wanted to hunt a bot, first and foremost, holy crap, we got to start seeing how many higher lows? I want to see 3 higher lows. In fact, I want to see the exact opposite of this scenario. I want to see W's, not M's. So if anything, just seeing that, you got to go, okay, I'm hunting a bot because I am feeling bullish and I think the market wants to work. Oh, shit, got to slow down. And, one way that actually this works really, really well is this is our LJ setup, which was first originally called an RJ setup, but then we had to change its name because that wasn't politically correct. And really, this setup says I can buy on a W on the other side of this trend line. So hopefully you can see the case for this bullish bot trend continuation trade is getting weaker and weaker and weaker by the moment, right? Does that not make sense? It's going to take a lot of technical work to clean up, to number one, break this M. And then actually, maybe it's going to take like something like that, right? This could take a while to clean up here. And that's assuming this is a low. The interesting thing about this is now that this M has confirmed, what kind of study can we draw off of that to actually give us some downside objectives? See if anybody has their thinking cap on. All right, so somebody says chaos, and that's exactly what I did here, right? And I went and I actually threw in a stink bid right at that level. See, I don't know whether this is the level or not. I think it is. I gotta say, after 2 really shitty trades, I actually had a half decent one I pulled out of my ass. This foggy, that foggy level is 26,909. You see how I did that? I don't know whether this chart's not level is the same, is it? 26,919. Slightly different. Interesting how there'd be different numbers, eh? Anyway, but roughly you can see what I'm talking about here. So this is up, down, up, fail. Right? And that high there is 27,546. 27,557. Yeah, so it's slightly higher. So that gives you a target 26,909. And I thought it was kind of funny here. I worked a stink bid right there. 26,942. And look where I got filled, 26,892. So I actually got filled even below the 2.618 order down in that area. I got kind of lucky on that one. Anyway, so could we not do this same logic? I think so. So we can go there, to there, to there, and there's a level. Now, this is interesting. Remember what I said? I don't know whether you guys saw this. I thought this was so freaking cool. But 4-hour candle body lows for trade location. I mean, I tell you, man, live by this stuff. It's incredible how it works. So that was this image right here. This was the tweet that I put out. This is why I thought, because of these candle body lows in here, this is why I thought we weren't going to get too much nasty action down in here. So there's your 4-hour candle body lows for trade location. Could this not work now? Aren't those 4-hour candle body lows now? Maybe we can even sharpshoot even a little bit better. See if we can sneak in off of that level. Now, what's interesting about this, right? We'll sync this on all the charts. Let's maybe like make it a funny color like pink. Right, so there's that, right? We can even put another 4-hour candle body low level right down in there. So now let's go back to that 9-minute chart. Let's see where that lines up. Oh, there's our pink line right there. So isn't that interesting? The 4-hour candle body low. Remember the original 4-hour candle body low was there. Now, one thing I noticed on this reversal this morning was, hey, look at this 9-minute candle body low for trade location. And gee whiz, look how 2.618 is sitting right down in that area. And then finally, we could probably do like a reload zone. And we see that, oh, look at that, 786, 88.6. What do you think? Is that a confluence of levels? Sure looks like it to me. So if you are thinking about taking a trade on the corn, I think it's telling you right now, pay attention to 27,131, 27,075, that area right in there. I think that's kind of cool. Now, as long as we're above this 66 and we actually start Wing out and breaking this downtrend line, W's on other sides of trend lines, we can think trend continuation. But I wouldn't right now, especially with this confirmed down, I wouldn't be anticipating this as a bot. I would be anticipating that we got to trade back down against these lows. Then also remember, it's Sunday afternoon. We're going to be coming into Monday. I think that the whole stock market's going to gap lower tomorrow morning on the open. Asia and Europe are probably going to be really weak. Then I would expect some sort of counter trend rally to start and take us into Wednesday, the Fed announcement. And then once that Fed announcement is done, then that's actually when I think the real fireworks begin. So we'll have our weekly crypto show Wednesday evenings. Should be interesting to see how the market acted following that Fed announcement and into the afternoon and evening hours that night. My hunch is market's going to be weak on the open. You can see, the retail. This right now is 27. What the hell does that say? 27.5 roughly. The futures themselves, they went out on Friday at 29, so they're going to gap lower $2,000. I think the whole stock market, ES, everything, it's all going to gap lower, but I think it's actually a trap. But anyway, that's Brian's opinion. Okay, is there a minimum time frame that you'd recommend? I really don't want you going below even honestly, I think to hunt actually really good looking day trading bot setups, I would prefer that you use 4-hour charts to hunt your levels. Remember what I just showed you, candle body lows for trade location, reload zone, chaos levels. Works really, really good. Confluence. If you're in the level 1 program, you haven't learned a lot of the fibs and stuff yet, so you're just going to have to be patient. And I would prefer, what I'm really warming up to now is using 27-minute charts, 9-minute charts, using those in conjunction, hunting for divs off of them. And then once you have everything all lined up nicely, then drilling down to your 3-minute chart and taking the trades off the 3-minute chart. So if you can work with me over the next 10 to 12 weeks, just doing that constantly, I think you get pretty good. Yeah. So you said mention hunting divs off 9 minute. So, I mean, basically that's what I was just showing you. Here is the 9-minute chart. Notice there's the div. Pretty darn good looking div, eh? So ironically enough, if we do get a dump down into reload zones, down into these 2.618s, down into these candle body low levels, and we start Wing out here, and we haven't gone through these lows, or we haven't got like a new bearish div working here, I think you could start hunting something, looking for a rally back up top, which, like I said, I like the idea that into Wednesday, that Fed day, we are going to get that counter trend rally, probably like through this window here. Then once that's done, all bets are off. Okay, so talk that into the ground. Can you please, for level 3er, said, can you please tell your opinion about gold macro view? Can you share your view on why gold rallied in 1980? And its connection to Fed funds rate cycle? Can you see similar gold rally at the end of this interest rate cycle? You're a level 3 student, so you should remember back to level 1. Last fear cycle apex was around 1980. So not a big surprise that the fear, the anti-establishment trade then was to buy commodities. Commodities trading was all the rage. That was the thing, buying futures contracts, buying options on futures. Ironically enough, for those people in 1980, that was exactly the same as you guys buying crypto this cycle. It was the brand new product, the hot thing. That was the interest rate cycle peak in 1980. I showed you the comparison chart of the Dow, which I thought was actually a really good example, a good working example of that interest rate peak. Very similar to Mr. Larry Williams kind of conversation. And interestingly enough, I think we can make a comparison to Bitcoin cycles and the way Bitcoin acts that last interest rate cycle. Very similar. So let's see if we can just put that back on here. All right, where are you? There. So I love this. This is fantastic. That's beautiful. And then 1980, interest rate cycle peak, stock market bottom, interest rates peaked. Woo, way go stock market. So I think you could make the argument that we could probably do the same logic for the gold market. Why don't we just go GC1 exclamation mark? What time is it? And then you go, okay, so there's your interest rates. Then we'll zoom back, hit the Wayback Machine, and there you go. So, and actually this makes perfect sense because you notice the gold market actually topped out before the interest rate market really got going in earnest. So it was through this part of the market where the interest rates are going absolutely crazy. You notice that gold actually was done and it was actually starting to trend down. Why? Well, because people were onto the money printing, in this case, it was the savings and loan crisis and all that. But I would make the argument that here is your inflation push. Right. So whatever caused, and of course, this was runaway U.S. government budget deficits, crude oil market going crazy. That's your big push in the gold market. And notice, like that's like 1979. By the time actually 1980 hit, gold went nothing but down following that. So market peaks here because this is the peak of the money printing hyperinflation world. Ironically enough, as interest rates are cranking up here, the economy is actually breaking. The economy is going into recession. Recession is not inflationary. The only reason why gold was going up here was because the economy was booming. things were doing really well. Well, not really well. That's not really the best way to describe it. The inflation story was rocking and rolling. And, unfortunately, stocks were actually just kind of languishing. As soon as interest rates rolled over, then stocks could take off. But the point here is just simply put, hopefully you can see there's the peak in the interest rates, there's the peak in gold. Now, what is that? That's like almost, yeah, that's about a year and a half later. So if we fast forward to today, wow, I don't know, can't you see the similarities? So here's the peak in the gold market right here. So according to that logic that we just had there a moment ago, the peak in the interest rate market should come about a year and a half following that peak in the gold market. So that is, what's that, about 75 weeks, somewhere in that area, a year and a half. So that's right there. There's your peak in the gold market. And ironically enough, interest rates should peak somewhere up in this area if it's the same as 1980 scenario. So, what I would just simply say is they're actually the exact opposite ends of the spectrum here. And on top of that, we also have the dilutive effects of all of the printing of US dollars. Like, does gold price really look like that in reality? Believe it or not, in reality, I think this is what the gold market looks like right now. So you could actually make the argument there is your 1980-81 peak, and gold is it's not even comparable. It's a completely different creature here. Totally different creature. So, ironically enough, this was all through here. This was the massive money printing. Remember, I said the banksters got away with the crime right here. But you could make the argument that the market itself was seeing the crime being committed all through here. Is there anything in particular that the United States of America did? Oh, you like that, David? Cool. Through 2002-ish, all the way through to about 2011, 2012. Is there anything in particular that the Americans were doing through this period that might cause the gold price to rally dramatically? How about creating quote unquote wars on quote unquote terror? I do find it interesting that if you go and look at the gold market from way back when, that they actually, the French, they got so upset at this that they actually drove their battleship into New York Harbor and demanded that they get their gold back. Because was there anything, and actually this isn't exactly the same scenario, but is anything that happened over here, and we can't even get the data. The Americans, of course, had their war in Vietnam and a huge inflation push through that, right? They called it the war on poverty and all that. And that's where they actually make the argument, right? What happened in 1971? So it's interesting how we can't even get that kind of data nowadays. Actually, that's a bit surprising, to be honest with you. This only goes back to 1974. I would have thought, I thought that went back further. Anyway. So I don't know. I actually don't think that gold is in the same scenario that it was in last cycle. And one thing that really bothers me, guys and girls, valued viewers, can you not see kind of history repeating itself a little bit here? As you have a big run up, then you have a spike high, then you have a pullback, then another spike high, and then a uh-oh. So big run up, spike high, pull back, rally up against the highs, another top, and you can see there's a little smiley face up here. And notice a little smiley face up here. If you see the gold price through here, that could be very troublesome. I have no clue what the hell's going to happen here. None whatsoever. It's not even my job to predict what's going to happen here. Frankly speaking, I couldn't care. What I will say though is any good technician. Do we want to buy markets that look Emmy, or do we want to buy markets that look WE, especially off of these longer dated charts? You really want to come in and load up on the long side when, this might be a fun exercise. What's this simple technical analysis tool technique? Keeps you honest. Every technician should do it very first thing they draw any price chart. What is this rule? And if you don't know this, then I'm sorry, you're not a technician. You might be one day, but you're not now. The 50% rule. Thank you, Eddie. You notice if we do this study here to here, 50% rule. Oh, what a surprise. Right on the nose. So what does that mean? Does that mean if we M out here, should we maybe be thinking about that? Oh, what a surprise. I get the distinct impression if you wanted to buy gold, there is your price to buy gold. It's just that simple. The problem is price right now is about 50% higher than that level. It's a little bit concerning. So unfortunately, the person who asked the question, I don't, everybody and their brother is uber insane bullish of gold. I don't share that sentiment. Now, are there golds? The easiest way for you to actually see whether a market is in bull or bear is actually go look at the companies that are in the business. They're usually the best people to listen. Who better to know? It'd be kind of like, you want to go into cryptocurrency and ask the people that are actually running these coins how things are going. If you called up Mr. Do Kwon and you asked him, how are things going over there in Luna Land? What do you think his answer would be? So that should give you a pretty good idea of how things are going in crypto right now. So this is a weekly price chart of the gold stocks, right? The gold and silver sector. Is there any candle pattern here that maybe we should respect, especially the fact that it's a weekly chart? Anybody who's taken our education program knows distinctly weekly key reversals. Oh boy, are they ever trouble. So maybe let's wait till this resolves before we start getting uber bullish of the gold market. I believe it or not, I do like the fact that this is a trading range. So, I was putting out tweets this earlier in the week, I guess maybe late last week, on stocks that were sort of, you can see the nice little inside bar that fired on this gold stock index. Is this in a buying window where we might consider a trade here, right? If we go reload zones, oh, what a surprise. I mean, that's actually a pretty good trade location. Yeah, there's a nice little gap here that need filling. Looks like it was filled in. It's pretty close, eh? I mean, not the best looking double bottom. Again, think grade 3 Romanian teacher. If I went to the chalkboard in my grade 3 Romanian class and said, teacher, I can't speak Romanian, so I don't want to butcher. Wait, what do you think about my W there? I think teacher might be like, it's a bit suspect. I would say we ought to really respect that. That is about the biggest, ugliest key reversal you are ever going to see. But I wouldn't fault you if you were like, hey, you know what? I think there's a trade here. I'm going to come in off the bottom end of the range. I'm going to look to sell half on a double if I can. You know, there's a cool stock that one of our OGs found on Friday. I think it's Goro. Look at that pretty chart. So, you know, Brian and his crazy W's. Obviously, I like that. And then we got another W that happened right off of the original W level. And what's fascinating about this is that is a bullish key reversal breaking out through a double bottom. So I put out tweets on Friday going, gee whiz, that sure is interesting. But I have a funny feeling this is more like specific stock oriented, because if I look at like the biggest gold stock in the world, Newmont Mining, yeah, it was an up day, but I don't see any breakouts there. There's no key reversals there. Kind of like no man's land. We're not really at the bottom end of the range. We're not really at the top end of the range. We're just sort of right in the middle. So I don't really see a massive breakout. And like I said on that XAU, I mean it's okay, but it's not really something that gets me too excited. In the face of this massive weekly sell signal there, I think you better cool your jets. But can you find individual names that maybe, you know, they might have discovered a new gold mine, maybe? And then also, too, seasonally, this is the time of year over the next month or so when these gold stocks have bottom. So I don't mind, you know, probing down in this part of the market. But am I looking for new all-time highs on the gold price? Am I looking for you know, new breakouts? Look at the nasty weekly. Actually, yeah, that's a weekly candle too. Huge reversal here. So ironically enough, like with a stock like this, even though I might be interested down here, we get up into this kind of trend line resistance here, which is right back into this original structure, and I'm gone, right? There's a nice double, sell half on a double, get your free stock, throw the free stock on the pile onto the next trade. So that's probably the way that I'm looking at the gold market right now. Hope that helps. Same level 3 students. What's your opinion on dynamic yield curve? I remember we talked about this last week, so I'll move on from there. I got to get going here because okay, let's see if I can just quickly get to this. Given what a large producer of commodities Russia is and the echoing effect of fertilizer potash reduction in the world's food supply resulting in a possible world economic downturn, can we still see the end of the fear cycle ahead? Fear cycle is already over. We're now into the greed cycle. We're about to where the fear cycle officially ended in the end of 2017. So 2018, 19, 20, 21, 22. We're 5 years into this greed cycle, boys and girls. And the cycle is only 17 and a half years in duration. So you only have another 12 years left of this greed cycle. So I think the best way to understand what the stock market really looks like in reality is this. So I might argue that 2018, 17, 18, yeah. So there, you know, this is what we've done so far in this greed cycle, right? There is the beginning of this greed cycle. Nothing. But remember, right, the beginning of the greed cycle for the stock market. Where was that chart? Is that this one? Yeah. 1980, right? Beginning of the greed cycle. This was the last greed cycle. It started in 1979, 1980, and you can see the first few years of this cycle. Market did absolutely nothing. So that's what we're going through. Can you be patient and let this cycle play itself out? Well, you can give up on the market. There, you know, in our, you know, you're a level 3ers asking this, so you already know this, but our OBV guy, Joe Granville, who wrote that indicator, he said, sell the stock market here, get out, get out. How did that work for you, Joe? Oh shit. So, by the time we get to the end of this cycle, are you even going to be able to recognize what the current market looks like right now? I doubt it. And I think that as soon as they get ahead of this inflation problem, right, and put all the workers back to work, get the socialists out of office, get some right wing, good conservative money managers in there, you're probably going to see that happen in the stock market. So get ready, strap on your seatbelts. I've showed you this guys before, right? That's what that image is. I know none of you believe this. I know, and I don't even really have any concerns about whether you believe me or not. But that's coming down the pike, folks. I hope you're ready. Just make sure to just be a part of the game. Ride the wave. It should be a pretty good market. We just got to get through this damn Benner cycle shit. So, slow and steady. Okay. So hopefully I talked to you there, Honey Bite. Oh, Honey Bite. So and I don't really buy into the whole commodities are highly priced right now. I think relative to the hyperinflated currency, you look at the headline number, yeah, they look high. But in reality, commodity prices aren't that high. I know you're going on about fertilizer prices and all that kind of stuff. Remy would just tell you to take a chill pill, go buy some dog money. Here are your grain markets. Are wheat prices really that high right now? No. Mr. Putin, of course, is going to convince you that there's some sort of crisis, but wheat prices are not very high right now, historically, at all, which is scary because what it means is the bankster crooks have diluted the shit out of a currency, and you now should expect to pay $20 a loaf for a loaf of bread. Because $20 today is not $20 what it was 10 years ago. It's as simple as that, folks. What's scary is if we actually do get into crisis scenario, and I don't even know how the hell you figure out the goddamn price, but I might argue, megaphones, connect the dots. Those are their cycle peaks in the wheat market. And we're nowhere near those levels. I mean, literally, wheat prices could double, triple, quadruple from these levels just to get into the environment that we go, oh, yeah, historically, now wheat prices are really high. So that's the scary part about this. And what's interesting is that the media doesn't even understand this. So the talking heads, believe it or not, they're as clueless as anybody else. Right? And they'll talk about things like, oh yeah, look at the Russian and all that, and it's a load of horse shit. They don't even know what the fuck they're talking about. No, these prices really aren't that high, which is so sad. Oh well. Okay, let's keep moving the bus forward here. Okay. One, Brian, with all of the unfortunate events surrounding the recent school shootings in Texas, the U.S. government has its eyes set on further firearms, especially when it comes to assault rifles and high-powered ammunition. Is it possible if they try to pass a bill to outlaw such weapons, we would see a massive spike in? Oh yeah, I remember we talked about this. I wouldn't be surprised if the actual weapons themselves actually become in high demand and they actually go up in price quite a bit because they become so rare. And they become like collector items almost in a way. I don't know whether the stocks would actually benefit. The stocks themselves might not do so hot. And I remember that was the question I gave you before. Number 6, I've got Excel. Week 1, crypto is indicated as being a commodity. However, if you remember, and I talked to you about this before, crypto is definitely a commodity. It's a change that happened since the market material record, and then Keep in mind, Afghan crypto, and this was the answer I gave you last week, is that these commodities are classed in different categories. And I think a lot of places are putting the Bitcoin, but I have seen some places will put Bitcoin in the indexes. Some places will put Bitcoin in the currencies. So I don't even think the industry even knows where the hell Bitcoin belongs. But I definitely think it's a commodity. Yeah, remember we talked last week about copper versus gold. So I think we don't need to go into that anymore. David level 0. Brian, do you consider yourself as a boomer? And I said no. I live in the shadow of the boomers. I'm a Gen Xer and a bitter one at that. Thank you very much. All right, now the recent questions. Let's see if we can just bang through these the next 10, 15 minutes. Then I got to get off to Liam. So my buddy is a dock worker in the Long Beach, California port. Their union's work agreement expires July 1st. My buddy says the negotiations are going terribly and predicts a strike. It has only previously happened in 71 and 2002. If this happens, where will you be looking to short? Well, if anything, this makes perfect sense because we're thinking that the inflationary pressures are going to peak with the year-over-year comparisons in May, June. So you get the year-over-year comparisons that peak, and then all of a sudden, underlying events start to happen in our economy. Oh, I gotta sneeze. Things start to happen in our economy that start to back the whole system up again. Thank you, Edry. So we had all of the ports, and this is the number one reason why I think we have this price inflation now. It has nothing to do with consumer demand. And one thing I will say is the Americans, at least the U.S. Senate was controlled by the Republicans, and they were able. Remember, there was just one or two senators that had the balls to stand up to these socialists and say, no, stop, slow down. Remember, it's like fucking the senator from West Virginia or something like that. I can't remember what the guy's name was. In my country, there is no check. So we've got Barbie who's saying, well, the reason why Canada housing prices are so high is because, hey, this is the cool kids table. Everybody wants to sit at our table in the lunch cafeteria. That's her logic as to why Canadian house prices have all of a sudden gone up by 50%. Oh, we're in the middle of a COVID lockdown, aren't we? I mean, how does that logic work? Aren't you supposed to be like maybe limiting the amount of people coming into the country right now? And all the people that you are letting into the country, it turns out that they've done a study, and 2/3 of these people that you're sort of immigrating into our beloved country are on social assistance. How on earth can somebody who's on social assistance afford a $2.6 million fixer-upper piece of shit single-family home in Vancouver? So, I mean, it's a crime what they're doing here. It's an outright crime. So, sorry if I got a little colorful there, but it's all a crock of shit. I mean, the goddamn socialists screwed us. All right, so what is saying? The whole reason why we had this inflation push here of late was because it was supply issues, right? And you heard Chair Powell say, it's the I just lost like 5 viewers there on on YouTube. They all went, "Oh my god, this guy's crazy!" And they all bailed. That's funny. Hit the like button, subscribe, ring Colleen's bell, all that stuff. And so the price inflation happened. One of the main reasons they say is because all these ships were sitting off of the California ports. They were all full of stuff, but the people wouldn't let the ships unload. So there was a supply crunch. All the consumers were given a ton of free money. Why? Stupid socialists. And as a result, it became a bidding war for PlayStations. Just irresponsible economics, irresponsible government, staggeringly irresponsible. Oh, they're going to do it again. What a coincidence. Can you see how what this is going to do is it's going to cause a whole bunch of ships to be sitting there offshore. They're not going to get unloaded, and we're going to have another big wave of supply shock. So whoever asked this question, in a weird sort of way, you can already see the next wave of supply crisis coming. It's already happening. It's shocking. Look at all you guys over on YouTube going, woo! Go Beamish! You're gonna get yourself killed! Fucking A! And the funny thing is if I ever do get the following and the influence that all these guys like Josh and Chris and stuff want me to have, I probably am gonna get taken out by the 1%. They're gonna say, okay, let's go find Lee Harvey Oswald. Let's go find John Wilkes Booth. Let's go find John Hinckley. Oh, by the way, all of these people were connected to the banksters. Interesting. And let's remove Mr. Beamish from the equation now while we still can. It wouldn't surprise me, mark my words. Somebody make a date reference to this video, and after I'm politely removed from the equation, you can all put this little video clip on my effigy on my grave in Decentraland. Okay, so interesting, Breeze, if you are here, fascinating how this all aligns. And do you see how we could get to the middle of August and remember our report, right? Good old, I don't think it was this one. Where are you? This one, right? Notice end of so you said that the ports all of a sudden will start shutting down. Give it like say 60 to 90 days or so, and what actually causes this. And here's the interesting historical comparison. Let's see if you guys actually are any history buffs here, because I love doing this because I am a history buff. So what was the catalyst that they say actually turned the tide to break the socialist movement in the United States in the early 1980s? And actually, this would align perfectly with you know who coming back into power. This would be almost absolutely textbook. Anybody know? What was the event that they say was the tide turning event? And following this, it was rah capitalism, capitalist rule. Something happened. And if anything, this ties in really, really nicely with unions trying to sort of get their way now, right? I heard that Starbucks now, all their union are becoming union. Amazon is unionizing. So in essence, you can see exactly what's supposed to happen. This cycle is happening. The EU wants to mandate $14 minimum wage. Of course, like we said, that's just the 1% throwing the fucking peasants a bone. Anyone? Eddie, you fancy yourself a smart guy? What the hell happened in the early 1980s? No one? You guys are all getting over that crazy over the top rant. Close. Wow, isn't that interesting? Hey, there you go, Eric. Nailed it. Good job. Give that Eric guy a cigar. I guess they don't give cigars out as rewards anymore, eh? Did they actually? Yeah. So anyway, the answer is Ronald Reagan fired all of the air traffic controllers and broke the union. They went on strike, probably very much like your dock workers are going to go on strike here. And Reagan said, fine, you don't want to work, you're all fired. See ya. And that broke the back of unionism in the United States of America. So, and especially, fucking Sleepy Joe here, he's a big union fan, right? So ironically enough, we might find that this bullshit goes on for like a year or two here. And Sleepy Joe just gets into worse. We're going to have another supply chain shock, more hyperinflation. And Sleepy Joe spends the last 2 years of his presidency just like Jimmy Carter, just a total lame duck. That wouldn't surprise me. All right, number 2, in Ray Burchett's IDT video, he talks about how performance risk management and capital risk management are entirely different plans. You better believe it. What exactly is performance risk management? How do you apply it to your trading? The easiest way for you to answer this, Francis, is go into the library and pull up 2 documents. First document you're going to have to find and load is TRI's Demon Finder. So, can you see how many different ways you can fuck up this business of trading? There's a lot of ways to screw this up. It sucks. It's brutal reality. This is a job. Basically, you are your own employer. Nobody's going to be standing over your shoulder going, hey, you're not supposed to do that, right? You got to manage yourself and look at all the different ways you can perform poorly. So this is all about the performance. It has absolutely nothing to do with risk management. Risk management is one of the criterias down here, right? Didn't take appropriate risk on trade, whatever. But there are, hell, look at this. I took a trade and trade wasn't even in my trading plan. What the fuck am I doing? How many times, and anybody who's actually fancied themselves a trader, this question. This question just kills you. I was in the trade, everything was working, and for some stupid fucking reason, I got out of the trade early. You know what that is? That's fucking what I did this morning. I was basically, I grabbed the fucking bottom of this Bitcoin market this morning, and I was like, well, I just want to clean up the loss of the previous trade, and so I'm just going to close everything out and just take my money and run. It turns out in hindsight that I suppose was a half decent idea. But as you can see here, should this be a Demon Finder log? Why did I just be happy with taking this loss back because I bought down here at this 2.618 when really I should have maybe sold half of the position and then just trailed my stops and try and lock in as much profit as I can, because that's what we're supposed to do as professionals. And look how much money I left on the table. So is that a Demon Finder log? Does that have anything to do with risk management, or does that have everything to do with performance management? I think I have like 2 of these documents over here. So whoever asked this question, Francis, are you here? Does that make sense? It's not a bad idea, Irina. The only problem with that is if you're ever going to invest in stocks, you've got to remember a few things. Number one, structure of the actual shell that you're buying. Low shares out, not trading too much relative to book value. Companies not carrying debt. They actually have some earnings. They're relatively low relative to the cash that they have on the books. All that kind of internal structural stuff. So, yeah, I love investing in rare earths, but you can go and buy a rare earth stock in like the middle of Kazakhstan or something, which a lot of people did. And then, of course, you're invested in Kazakhstan, and the government comes along and says, man, this is Kazakhstan. Suck my dick or get the fuck out of here. That's the brutal reality of capitalism, Irina. Don't mean to be rude. Suck my pussy. I don't care. Doesn't really matter. Point is, these people, when it comes to money, they're ruthless. So if you're ever going to buy a stock in rare earths and stuff like that, you got to actually ask yourself, where do these people do business? On top of the fact, what's the structure of the company like? Of course, in our education program, we teach you about 4 different valuation models. In fact, actually, that was our past week that we just did here was fundamental analysis, if I'm not mistaken. So there are a bunch of moving parts. Now, you want to come on the site and you want to throw some names at us, Monday to Friday, we can take a look at some different names and look at the FA, look at the charts. We can kick around some ideas. I always want to try and buy these stocks at or below where insiders are along the stock. Options to directors, great way to figure that out. Like I said, I want to buy stocks that are relatively cheap. I'm a cheap ass, so low to price to book, low price to cash, low PE ratios, no debt. So that hopefully gives you some thoughts. Do I like rare earths as an investment? Absolutely. I think that's actually a pretty good place to think. What I would say though is let's not get too excited about investing in the stock market until you see that interest rate market turn. So I don't know how long that's going to take. Just like crypto, I don't really think there's anything to do in crypto other than day trading and having fun flipping this stuff off lower time frames. But I don't think there's anything to do investment wise for quite a while. It doesn't mean you can't identify good fundamental stories and do things like dollar cost averaging. But again, like I said, maybe come on the site, throw some names around. Let's look at the charts. Let's look at what the fundamentals look like, the structure, where they're operating, jurisdictions, all that kind of stuff. Okay. So I'll give you some stuff to think about. And no, I do not invest ever in China. Don't invest in Russia. Ask the Joe Sixpack Ukrainian what they think of Russia, and really, why would Vladdy acting with your money been any different than a typical Ukrainian trying to tell him to go fuck himself, and him saying, "Oh no, actually, I think you people are Russian, and if you don't like it, I'm going to murder you." Could he easily say, "Well, I think your money is my money, and if you don't like it, well, tough fucking shit." That's the world. That's the real world we live in. And what really angers me is over the past 20 years, we were all spoon fed this bullshit fucking line by CCP, Winnie the Pooh. And what kills me is that our Western politicians are so spineless that they actually rammed this fucking message down our throat that actually these people and everything's fine, and it's okay to go and invest your money over there. Fuck. I mean, our own people who are put in jobs to protect us, to keep us safe, they sell us out. And you wonder why things like revolutions happen. Oh. All right, moving on. So, Francis, are you here? Did that answer your question? I told you the first thing you got to do is get your demon finder out. And the second thing, and actually I like this because I'm having all the level 3ers do it now, whether they like it or not. If they want to participate in the day trading room, and really I might even argue in any of our advanced rooms, I think it should be required. They got to show us their pro traders workbench. So that's things like, do you have your trading plan? Do you have your demon finder? Do you have your trade log? Have you logged 100 trades? If you do fancy yourself a pretty good trader, can you show me 20 paper trades or, 1/10 account size trades if you just have to have some money in there? And then, mistake free. And if you can't not make mistakes, then you got to go backwards, slow things down, go back to paper trading. In fact, I hadn't, professionally day traded futures contracts since like 2013. Well, that's a long time ago. So about a year or so ago, we got a day trader room back up and running on the site. And there were some guys like Kiran is a professional futures trader now, and he does it day in, day out. And I was like, okay, you know what? I'll come and join you. I want to do, I'll try and pass it. And my trading sucked horsecocks. And I literally had to take a year or so to get my head back on straight and figure out what the hell my plan was. And could I actually execute without making mistakes? And I'm still making mistakes, but I'm at the point now where I feel as though I am demonstrating good principles and practices, logging, journaling, diarizing, demon finding. And now the other thing that I want you to do, Francis, this was the second part of this, is I think everybody at TRI should go and give themselves a report card. Everybody. And literally every quarter, I think it would be a good idea on a quarterly basis, you give yourself a grade. And again, look at all the different things that you have to manage while trading. And risk management is just one very, very small part of this. Do I have my plans actually done? How am I doing on controlling myself? And I'll tell you, Brian's a bit of a fat ass. I don't think I would get much of a passing grade here. I could tell you that much by crackers. Here's your trade management. All right. So how am I doing on logging? How am I doing on checklists? My demon finder, am I filling? I mean, there's just so many jobs that you have to do as a professional trader. And I remember distinctly when I worked with Ray, this was his whole pitch is that Ray is not going to even talk to you about setups. Whatever setup you figure, squiggly line, whatever, throw your dog's food in the dog bowl, lands on the left side, it's a buy signal, right side, it's a sell signal. Ray doesn't care. That's not part of his training. His part of his training is what is the actual work involved in actually doing this job correctly. And it's a lot of work. It's a full-time job. And what I find fascinating is most of the people that fail at this day trading dream, they don't realize that this actually is a full-time job. This is hard work. Very nice show as always. Well done. Hey, that's a cool statement. Thank you, David. I got to get out of here. Fuck, I don't want to be late for Liam. Okay, so hopefully that helps answer that question. Gabrielle says, what's your take on fractional reserve banking? My take is it's a con. Basically it's the same thing as the goldsmiths shaving off gold and silver from the coins that they were passing out, 500 years ago. And it basically led to the demise of the Roman Empire way back when, because people kept shaving off the value of the coins. And then eventually you look at the coin, you go, this coin's worthless and I want to use something else. And that's the end of the Roman Empire. So same thing. And what you find, Gabrielle, is that and there was a really cool image. Maybe somebody can find it. I tweeted it out a year or two ago, so it's way back there in Twitter somewhere. But you can literally see that they've done this now, this fractional reserve banking sort of, they pick a currency and it is the hegemony for the next 100 years. And then over that, and it's really about 80 years. And then over that 80 years, they just chip away, dilute to the point where the currency is worthless. And then they hop on to the newest hegemony currency and they do it all over again. And you can see a history of humans going back just past 500-600 years. Every 80, 90 years, we switch from a currency to a new currency to a new currency to a new currency. So nothing new. It's all a scam. And it's basically to ensure that the banksters enjoy these ridiculous profit margins, and it never ends. I mean, the whole reason why you're seeing the way the money is being printed now was just simply to offset all the bad loans that the banksters should have never lent out to begin with. The people that they did lend the money to, they've all gone bankrupt and they've been all completely destroyed. The banks themselves should have gone bankrupt as well and been insolvency, and whatever assets were left should have been distributed to the debt holders, and that would have been the end of the institution. But no, they conned the U.S. government and all the taxpayers into, hey, go and print a whole shitload of money and dilute the fuck out of your currency, which is going to hyperinflate prices for everybody. Everybody's standard of living is going to collapse, and that's exactly what's happened. And the banksters can continue their business model and literally start the whole damn process all over again. So there's your answer of what Brian thinks of fractional reserve banking. And last question here. Given that Bitcoin is becoming somewhat institutionalized, do you think there is any benefit of trading Bitcoin, looking for short-term setups on the weekends and after hours when the big guys are offline? Well, just from today, this is a really interesting anecdote of trading here today. because I think there was the most beautiful FU setup against all of these lows that could have produced a really big day trade win for you. As funny as we were sort of going through the weekend, I was musing. I even said there's no bull divs here. So we're just, just sort of probing. This was really important 4-hour candle body low level, which I think they're going to pivot the market off of. So it's interesting how now you can see they brought the market right back down against that level again. I wouldn't even be surprised if over the next few hours we do something like that, and then you find mysteriously the market accepts that 4-hour candle body level, and away we go. Of course, I think actually we have to get through the New York Open tomorrow morning. Stock market's going to open down. It's going to be really ugly, but could you have made some pretty good money on that move there? I think so. Could you have lost a bunch of money trading classic setups that were actually nothing more than traps? Yeah, I think so. Is this easy trading? No, I think it is not easy trading. This is extremely difficult trading. If you are good at this game of trading, I think there's some money to be made. But I'm not going to say it's easy. And I can even say here, and it's interesting because you can see my loss is basically, and this is just, paper trading, but that and that, could I have, we can even take the boxes. If I had managed this position appropriately, interestingly enough, right, there's one box. That's not what I wanted to do. Oh, come on, you. Anyway, one box and another box here. Could I have, that I did this one to get my money back off of that fail. But could I have actually made more money and actually been profitable through the weekend? All right, can I get this box? Come on, you. No. Come on. Damn box. Anyway, I guess I can't do it. I'll just eyeball it. But there to there, I think is about the first and second. So that's that box and that box there. Could I actually have gotten like a 2-to-1? All right. So total losses were $600. And on this one trade, had I milked it and said, well, you know what? I'm going to do a 2-to-1 of my losses. Yeah, I actually could have gotten filled up top here. Then I would have had a profitable weekend. So go figure. So is there money to be made? Yeah. Is it easy? No. That's probably the way that I would describe this. And then I'd also say too, I think probably once we get on the other side of that dump event, following the Fed, I actually think that the money will be a lot easier to make. But we got to get on the other side of this June event here. Once we're on the other side of this, I think we actually will have a month or two of half decent profit opportunity, whether it be in the stock market or the crypto market on the long side. And then once we get through the summer and we start getting ready for the end of the summer, then I think we're back into shitty mode again. Once we get through the election, then I think we're back into, we got a nice little window to make some money again. And once we get into the end of the year, into the start of the new year, then I think we go back down, right? So as it stands right now, this has been an absolute train wreck from about the middle of May right through to June, July. We knew it was going to be. Every single day on the broadcast, it was just like, this is crap, this sucks. When's this going to end? Oh, my goodness. But I think we're closer to the bottom than we are the top now. So that's, and if anything, I had a really fun little trade. This is, you can start to get little anecdotes in the market that, hey, you know what? I think the market's done going down and actually wants to start going up. And that was on Friday. There was we're actually starting to get into the environment again where people are talking about things like short squeezes. So this kind of stuff doesn't happen at the top of the market. This kind of stuff starts happening at the bottom of the market. And then these things get bid up. I mean, do you guys remember how high GameStop went? And what was the other one? AMC, the movie theater one? Those were short squeezes. goddamn stock price went to like hundreds and hundreds of dollars. So could this thing just getting going, could it rally all the way up into hundreds of dollars? There's no reason why it couldn't. But this is an interesting anecdote that this kind of stuff doesn't happen in a bear move. So this tells me that we're starting to get close to some sort of pivot here. So anyway, I hope that helps. Okay, I'm going to stop talking. Got to go have a quick shower and then get off to the boy. Everybody give a collective good luck, Brian, with Liam today. And I'm going to leave it at that. I have to get the hell out of here. I'm already running late. So have yourselves a great day. PMA for the win. I hope you guys enjoyed the broadcast. All the best and bye for now.